Well, hello, my dear friends. I hope that all of you are safe and sound wherever you are, and most importantly, healthy. So, guys, while owning a house in Canada is everyone's dream, I am sure every new immigrant aspires to own a house at some point or the other in Canada, right? But it's an overwhelming experience. We all know that. And it is especially true if you are a newcomer and you don't have much information about how things work in Canada. There are a lot of things involved, from getting mortgage approved, from saving for down payment, finding a good realtor, choosing the right neighborhood, and if you have kids like us, then finding a good school. Correct? So these days, with work from home getting more popular, there are many people who are considering leaving Toronto or the greater Toronto area and moving to far away places so that they can work and stay at home, work, and at the same time they can manage their day-to-day stuff. Working remotely means that people are no longer needed to live in close proximity to where they work. Having said that, the most important point that everyone knows and no one can undermine is the need of having a very good realtor, right? So with all that questions in mind, I have requested a trusted family friend, guide, a senior, Mr. Raju Ravi. So I've requested Ravi uncle, as we fondly call him uncle. So I've requested Ravi uncle to please take out time from his busy schedule, come to this live session so that he can answer our questions. So I am looking for a very interactive, informative session with Ravi uncle. Hope you all put a lot of questions at us so that Ravi uncle can answer them one by one. So without further ado, let me introduce you, Ravi uncle. Hello, uncle.
Hey, Sid, good morning, and it's a beautiful morning. Thanks for the very nice introduction. And before we start, let me tell you, you and Sim are doing a wonderful job.
Thank
I
you.
follow you, I follow your blogs, I follow your videos, I watch everything, me and Sumi, and it's a flood of information you're offering.
Thank
You
you. Thank you.
started with the supporting newcomers, but now you're expanded your information flow to cover all of us. Some of the videos I watch, I've been here close to 30 years, and some information is wow, is it so? Are there so many options, right? So you are excellent in doing a lot of due diligence, homework and summarizing. So hats off to both of you with two kids, especially one, Amy, a baby. I don't know how you guys manage to do it. It's a big service you do to the community. I
Thank you.
applaud you guys.
That's really commendable. Thank you for the all appreciation. And just like any YouTuber, we'll all take some time to do our self promotion. So for those of you who don't know us, we have a YouTube channel named as Sim Sid, the link of which is this. And you can also follow us on Instagram. This is the Instagram ID. And we also have our official merchandise on Spring. And for those of our friends who are in US, we have arranged for free shipping. So you have to use the code free ship in order to avail this particular benefit.
Yeah.
And we are also giving 15% discount to all our friends. So this is the code that you have to use, SimSid15, and you'll get a flat 15% off. You can also email your queries to us. This is our email ID. So me and Sim, whenever we get time, we'll try to answer all those questions and we'll reply back to your email. And Sim also has her own YouTube channel named as Joy of Parenting. So I would request you all to please subscribe to this channel as well. And Ravi uncle has a Facebook page, Raju Ravi Homes. So I request you all to please go and follow him there also. And again, you can follow Ravi uncle on Instagram as well. Raju Ravi Homes is the ID. Also, Raju uncle has a website, www.rajuravihomes.ca. So you can follow him everywhere on social media, and he is very active. He'll reply back in a couple of hours as and when he gets time.
Absolutely, yeah.
So are you ready for a very informative session, uncle? And we already have a couple of questions here.
Of course, I am ready, and I'd love to get things started because there is a wealth of information to share.
Absolutely.
And I would like to demystify Toronto or Ontario real estate to a lot of the newcomers and first-time home buyers because things are seemingly scary, but it's not, right? So I am ready for questions. I'm ready to take any, give right answers, give good direction so that people can, understand what real estate buying is all about, right? And then go forward without a fear.
Perfect. So having said that, let's get started with the first question. So, Uncle, these are the type of questions which I have been asking you from last 1.5, 2 years. I have been
Yes,
bugging you with a lot of questions. But for the context of this video, I am going to ask the same set of questions again. So
absolutely.
I would request you to please guide us in the right direction.
Absolutely. Yeah.
So, according to you as a real estate agent, what are the key things that one must consider before buying a house?
Absolutely. Whether it's a first home or their, nth home, said,
Mhm.
the one thing that you need to consider would be your mortgageability or affordability, right? People get bogged down by prices. They look at, statistics. I would say take statistics with a pinch of salt. Okay.
Right.
Because when a statistics is produced, it's an average, right? It
Mhm.
doesn't say your exact segment. For example, right now the highly competed segment is homes that are 600,000 or priced between 600,000 and $1 million. We're
Okay.
talking about larger condos, condo townhomes, and freehold townhomes. So
Mhm.
anybody who wants to buy a home, they want to jump into this segment. So it's highly contested. Hang on, let me raise my volume. How do I? Better now? Okay. All right. Cool. So okay, yeah, okay, let me know if so that is a heavily contested segment. So again, without getting into a lot of details, getting the worrying about the world, what we need to do is first of all talk to a mortgage agent. And
Yeah.
we have tie up with a lot of mortgage brokers and agents who can talk to you as a first time home buyer or a prospective investor and tell you, okay, this is your existing liability, so you are mortgageable up to x amount of dollars. So that would be the first step to understand, okay, what can I target, what is going to be my target budget, right?
Right.
Without knowing the budget, people start looking at larger units or much larger units that is not within our affordability right
Correct.
now, right? I'm not saying it's not, just because it's not affordable now, it's not going to be affordable in future. So first
Correct.
step would be call an agent. I can definitely refer you to mortgage agents and brokers, trusted people that I've known for like 15, 20 years. They'll guide you within like a half an hour conversation. They'll tell you, hey, you know what? Based on where you are right now, you can go up to $750,000. So that is your first tool. That gives you, that
Mhm.
arms you with the ability to come back to the agent and tell, okay, this is my affordability.
Right.
Now let's look at products, right? When I say products, it could be a condo townhouse, or it could be a condominium apartment, or a freehold townhouse. Okay. So based on, and the location is key,
Right.
because people used to say, you gave a very good introduction, right? Before 2020 till 2019, people used to be bogged down by location. They say, I want Mississauga because this closer to work. I have a lot of friends living here, I have family living here. And you will say, my uncle lives here, so I want to live in Mississauga, right? Right now, that's not a huge constraint. I would say that will be a consideration,
Yeah.
because that's a choice. But if you are looking for a product in Mississauga and it's like $150,000 priced over than something that's in Cambridge, and
Yeah.
you're thinking, hey, I don't have to commute to work every day. And for the benefit of the viewers, Cambridge is about 70 kilometers, 70 to 80 kilometers away from Mississauga, right? So if you still need to commute to downtown once or twice a week, it's okay. You can sacrifice on the commute time, but look for the desirable product in another area, right? Like you
Right.
said, remote working has expanded our scope from, we used to call it GTA, Greater Toronto Area. Now it's almost like the Golden Horseshoe, which
Absolutely.
extends from Grimsby, Niagara to all the way to Bowmanville, right? So I'm not saying move to Bowmanville, but there are options, right? So first consideration, short answer is, let's get a mortgage qualified. Let's
Mhm.
talk and decide on the time frame you want to buy and the product, right? So
Correct.
all these equations, just like managing a project, all these three variables, when they come to place and we decide
Mhm.
on the location, the money, and the product, it's easier.
Right.
We can avoid a lot of heartbreaks. We can hit the nail on the head and get moving, rather than going all over looking for a good location, looking for a product, and then find out, okay, I found the right product, right location, I can't afford it. What do I do, right?
Correct. Yeah. Yeah, so that's a very good point that you have told. That first find out your affordability so that
Yeah,
you have a realistic figure in mind, and then you can look at in that direction. Absolutely, very
absolutely.
well
Yeah.
said. Thank you. Now let's take the second question. Between pre-construction and ready-to-move houses, which one would you prefer?
Hands down, before 2020 till 2019, if you ask me, hey, I'm a first-time home buyer, uncle, I have $40,000, $50,000. What do I do? I would have held your hands, taken you to one of the builders that I work with. I work with most of the builders. I'm a platinum broker with most of the builders, and we would have gone to a location of your choice, booked a house, and walked away. Right?
Okay.
But the prices have significantly increased for new homes, pre-construction homes in 2020 and 2021. And if I have to quote some examples, in Mississauga, if you look at a resale condominium, price per square foot is around 650 to 750, depending on where you are, what kind of product you're looking at. Whereas the new building prices are around $1,000 a square foot. So pre-construction homes have significantly increased in price because the builders are seeing a huge, demand, and they're trying to supply products that are affordable, but home sizes are getting smaller. The price per square foot, has gone up significantly. So I would say, like, unless things change drastically next year, right? I would say, for now, resale, we have more options. We have a better chance to negotiate and find the product we want in the location that we want, right? So the short answer is, right now, although I have a set of people who are interested in pre-construction, we keep looking at products. We keep focusing on resale because we know what we're getting into, and we are not waiting for 2 or 3 years for the product to be released. And price is in our control, right? So are you able to hear me? Is it loud enough? Okay, cool.
So as you said, the pre-construction scenario is different now as compared to before 2020.
Yeah.
Do you think is it going to change somewhere in the future?
It has to. It's like it's like everything else again, right? In 2020, when COVID happened and the market changed, prices started going up. Right. We knew that 2021 we were going to experience some turbulence, okay, in the marketplace. We knew prices were going to go up, but what happened is not what we imagined. When we expected a turbulence, we got a tsunami. So the magnitude of price increase has been unfathomable. I've been in North America close to 30 years, Sid, you know that, and none of us experienced people, realtors or investors. We expected this kind of a hike between 2020 and 2021, right? And new builders are also taking advantage. They see the prices moving up, and they are moving up their prices too. Right. And when they advertise, a product for high 500s, and you see the size of the unit, it's pretty small. It's hardly, you pay 550, 570 for a unit that's 500 square foot, right? So condo sizes are getting smaller, and they are stacking up more units on top of one another, and the prices are not going down. So short answer to your question is, we would expect as interest rates go up and there is more products available, it's a supply and demand, right? When the demand and supply, now the demand is more, supply is less. We have a lot of immigration coming in. Welcome to all the newcomers. And we have a lot of foreign investment coming in too, right? There are some restrictions to foreign investments, but people see Canada, especially the Ontario marketplace, as a viable option to park their money. So they don't mind the 15% extra foreign investors tax as long as they can hold a property here, right? So everything's driving the prices high. Right. At some point, when the interest rates start going up, and by end of 2022, 2023, we will see some changes happening, but we have to take it with a pinch of salt. All these price clippings will happen at the top end, not in a segment where too many people are vying for the same set of homes.
Same set of homes, yeah. True. Okay, so I think it's time to take some questions from our viewers.
Yeah.
So the first comment is from Sumi Auntie. Good morning. Hello, Sumi Auntie. Thank you for joining.
Good morning to you.
And the second question is from Drupad. Please guide regarding London, Ontario real estate situation for new immigrant to buy a house for upcoming years.
It's a beautiful question. I don't know, Drupad, thanks for bringing it up, because when we said the golden horseshoe, right? It is the GTA has expanded. Golden horseshoes, any city you find along Lake Ontario. It's a beautiful, it's we call it the Golden Horseshoe because it's like a horseshoe. And London has been a place of choice for a long time, not just now. Because as we saw, even I'm talking about 15 years ago, right?
Mhm.
People have been moving to London because the prices have been pretty competitive, and it's a nice area. When we say London, people in Toronto and Mississauga, we think, oh, it's too far away, but it's not. It's about less than 2 hours. If you take 401 West, it's less than 2 hours, and there is a lot of companies coming in London
Mhm.
and in Waterloo. Waterloo is turning into a big hub, and between Waterloo and London, they are not that far away. So London is an excellent choice. It's cheaper, and there are some nicer, very nice communities. And you have an option because London is an older town. If you want to buy an older home a little further away from the city center and renovate it, there are options. If you want to buy a newer home, less than 5 years, 6 years, 7 years, there are options too. And significantly, the prices are cheaper. Only thing you need to consider is you are 2 hours away from Mississauga. So if you need to commute from London to Toronto even once a week, you need to factor that you need to take a Via Rail,
Yeah.
or I've seen some banks, they offer buses going from London to Mississauga, London to Toronto. So you need to consider the option because remote commuting, remote workplace is here to stay. I'm saying
Mhm.
that because all the big banks and all the major employers in downtown Toronto, they've seen that consolidating on real estate saves them a lot of expenses on an annual basis, right? So what I'm hearing is even like banks, they are going to one workplace for three people, which means they assign a desk for 3 or 4 people and you take turns. So
Right.
even if you move to London and your job is in Toronto, you may have to commute once or twice a week, but still 3 days a week and your weekend you're okay. So think about all the options. Think about where you're going to be working for the next 5 years.
Mhm. Makes sense.
Before you move away from the GTA. But if you're going to be working and living close to London, it's a wonderful option. I would encourage people to at least look at the option. If you're moving away from GTA, and if you say, hey, I'm going to Kitchener, I'm going to Waterloo, I'll say, hop on to London. Take a look at London because that's a beautiful city. It's a smaller city, it's a beautiful city, still a lot of affordable housing.
Right. True. The next question is from Heth. Uncle, probably you can answer that. She or he, I don't know, sorry, Samsung S20 FE 5G. I've heard that the phone of India gets freezed over there in winter. Is it true? It's been 3 years I am in Canada. I have been using Samsung phones throughout.
Yeah.
Never I have seen it happening.
Yeah, it might be, winter here, I don't know. Thanks for the question, though. Winter here, there is a misconception that, I used to work in St. Louis, Missouri, like 20, 24 years ago. And people often ask me, since I was Canadian, people say, how do you guys commute to work in Canada? I say, in cars, in buses, and trains. And people think, if you cross the border, the roads are frozen. Yes, the roads are frozen only if you go up north. We are
Right.
not north. We are close to the southern part of a lot of these cities. In fact, some cities in the US get much colder than Toronto, right? So having said that, if you use the phone at home and you take it from home to car to your workplace, I haven't heard of any phones freezing because of the equipment or the cold weather, right?
Yeah.
So that is, I haven't seen it happen. I use Samsung all the time, but that's a Samsung phone that's bought here.
Right.
But this is something no new. It might be that particular equipment has some defect if it freezes.
Possibly, possibly. And the
Yeah,
manufacturers would have already thought of such scenarios
yeah,
before getting into the market, right? So I mean, I don't see that as a problem.
yeah. I've seen -40 wind chill, and I've taken my phone from home to car. I haven't seen anything frozen yet. Knock
Right.
on wood.
The next question is from Sabah. Sorry, not question, a comment. Hi, Sim Sid. So Sabah has been our regular viewer.
Hey,
So
Sava, how are
Sabah,
you?
welcome to the channel and welcome to the live video.
Yeah.
Do ask some questions if you have any. The next question is again from Drupad. Can student who is on work permit buy house or property in Canada?
Good question. Very good question. I think Sid can also answer it, but I'll take the lead.
Sure.
There is a premium, like we alluded to, right? If you are a Canadian, which is a landed immigrant or a citizen, you don't pay any extra taxes. But people on a work permit, most cases, unless there is a limitation, my lawyer can comment on it, because this is done by the lawyers. If you are deemed to be a foreign investor, then you have to pay the 15% extra tax. For example, you buy a home for 500,000, you'll pay 75,000 on top of it as a foreign investor tax, which is refundable once you get your PR. Once you land in the country, there is a form. Again, the lawyer can help you file the form, and CRA will refund you the money pretty much. This is to help Canadians. Say it's to have some kind of a parity between Canadians. Say if there is a foreign investor and a Canadian trying to buy the same home, they want to give a little bit of advantage to the Canadian PR or a citizen to get to the home first. Doesn't mean you should not buy a home. You just need to be ready to pay the 15% upfront until you get a PR. Once you get a PR, the lawyer can process the paperwork and get you the money back. I don't know exactly how long it takes, maybe a couple of months. Given COVID, anything that takes 2 months takes about 3 or 4 months, but you will get your money back. But certain work permit considerations are also there. If you're here for a certain duration, I don't know how long, you still qualify to buy it under the Canadian umbrella. So short answer is, if you can afford that extra fee, buying a house now is better than waiting for 2 years later, because the prices are going up, interest rates are extremely low, ridiculously low interest rates. So take advantage of it now.
Right. Uncle, I'll tweak the question a little bit and I'll modify it. So a person who is on work permit thinks of buying a house in Canada, but then he has no intention of settling forever in Canada. He just wants to, play along the tide, keep the house, like buy the house for 500,000 now, sell it for like 750,000 in next 5 years, pocket the difference and leave. So in that case, what would you suggest?
Yeah. Like I said, as a foreign investor, you have to pay the little bit of a premium upfront. And when you sell and you don't have any intention to keep the money, this again, a lawyer can confirm, you will be charged a foreign investor tax.
Even while selling?
While selling as well. So that is giving the advantage again to Canadians.
Right.
To keep as much, real estate, as much, property within Canada as possible. It's a fair deal. Right. Otherwise, people who make money abroad can freely invest, sell and take the profits back, repatriate the profits back. So they are saying you can do it. If you have if you are a business, you can do it, but there is a business tax, a foreign investor tax, right? So that is taken upfront. If you are a foreign investor disposing of a property, you need to disclose it, and the lawyer will take the tax upfront when you sell the property. So what we can do is, I can also, if we have a lot of these legal questions, we can invite my friend Harminder, who's a lawyer, to one of the subsequent shows, and he can answer these questions. He can put a nail on the head. But yes, you can buy, you can sell, but there is a little bit of a premium. When you make money, the country wants to make some money too, if you're a foreign investor, which is fair.
So we have a couple of more questions, but we'll take our set of questions first. So moving on, what are your thoughts about moving to smaller cities for better value of money? And what cities would you suggest, except for Waterloo and Cambridge and London that we already spoke of? How about moving east of Toronto?
Yeah. So a couple of considerations, right? Like I said, qualifying yourself for the mortgage is the first thing. You need to know how much you can afford right now to buy a house. And then the second consideration would be, all right, what are you giving up by moving away from, say you live in Etobicoke and you have friends, you have family, you love the quality of life, you like walking to your lakeshore, all the good things. And you decide to say, uncle, I want to spend this money, but I want a little bigger unit. I want to move east. You have to add your work consideration as well. You need to make sure that you are okay commuting every Saturday and Sunday about an hour and a half to meet your friends, right? Or going to work, if you have to go to work and your work is not downtown, east is actually closer to downtown. It's not too bad, right? When I say east, I'm talking about Ajax, Whitby, and Oshawa, right? Same time it takes commuting from Mississauga. But you have to look at the social aspect, you have to look at the work aspect and say, I'm okay. I want this product for the money. That decision has to be taken first, right?
Mm.
What the most common mistake people make is they look at the product and say, oh, you know what, if I go to Oshawa, I can afford a bigger house, right? But then once you move, you're saying, oh boy, my sister lives in Mississauga. I have to commute like, 2 hours every
Right.
week to see
Just to
my
meet
sister,
her.
right? I mean, sometimes, staying farther away from your sister is a good thing, depending on the relationship. But I live about 10,000 miles away from my sister, not because, we don't get along, but, just like she lives in India, I live in Canada. But again, those are the things that you need to consider before. So, affordability is one thing, products is the second thing, then proximity to wherever. Proximity is a relative thing. For me, I say Mississauga is the center of my universe. For most people, it may not be, right?
Right.
So that after taking the decision, there are good options available, although prices are catching up. If you look at GTA,
Mhm.
prices are catching up. If a townhouse is $850,000 in Mississauga, if you look at, we just closed two deals, one in Whitby and one in Oshawa. You get to talk to them in the subsequent shows. New home, first home buyers, and it's not going to be 600,000. It's going to be in the 700,000 range, right? So you're not getting things that much cheaper, but the advantage is, it might be a newer product as
Mm.
opposed to older home in Mississauga. It might be in a beautiful, budding neighborhood where you want to be, right? There are some benefits too. So I would say do your due diligence,
Right.
get all the information. I can help you with, securing the mortgage. I can help you with, knowing the location. But take your car. If you decide, if you're living in Mississauga and you don't even know where Oshawa is, after we decide, okay, you know what, we're going to look for homes in Oshawa, take a beautiful Saturday like this, drive to Oshawa,
Right.
drive through Oshawa, look at different streets, look at different neighborhoods, call me, I'll tell you where to go, right? So get familiarized and make
Mhm.
sure that you can call it home, because once you buy a home, you are going to be there at least for the next 3 to 5 years. It
Yeah.
should be a place you should be happy to call home. But there are options. People are moving as far as Bowmanville, which is even
Mhm.
further east of Oshawa. But again, let's do the due diligence, let's talk to the right people and get our homework done before we decide to move. So price and product are not the only consideration. Your heart should call it home.
Very well said. So we'll take next question from Sumi. At times I see people buying investment property in Ottawa, but the value does not seem like to increase much. What do you advise on it? Thank you.
Absolutely, absolutely. Good point. So, me, this is the matter of instant gratification versus waiting for a while for the prices to go up. I'll give you an example before I jump into Ottawa. I'll give you an example of Waterloo. Right, Waterloo is a great place. A lot of companies are coming in. There are two universities: University of Waterloo, which is a huge campus, one of the best premier institutions for engineering in all of Canada, not just Ontario. And there is Laurier close by, right? Walkable distance from each other. So it's a beautiful place. And like 7 years, 8 years ago, people started dumping these little apartments, condo units in Waterloo, right? But if you look at 5 years later, not all of them have gone up in price.
Mm.
Whereas the neighboring city of Kitchener, it has increased in price. Cambridge, which is 20 kilometers away, 20 minutes away, that has increased in price. So it's not like a one size fits all.
Mm.
Builders have to know that, buyers and consumers have to know that too. Just because somebody is dumping homes in a particular place, the values are not going to go up drastically. Somebody, Drupad or somebody asked a question: London is a better place. London has appreciated in value. Although London is further away, London has a. So, same with Ottawa. Ottawa is a smaller city, although it's a capital, right? Most people know it's the capital of Canada. It's a smaller city, right? There are a lot of government museums, government offices. It's got its own charm because Ottawa is like a twin city. You can walk to the French side, which is called Gatineau,
Yeah.
and the English side is Ottawa. It's a beautiful, beautiful place to live in, but property values are not appreciating as much as in Ontario because the key, people move to a place where there are jobs. New immigrants move to a place where there are jobs. People might migrate to Saskatchewan, but eventually, 2 years down the line, you find them in Ontario because there are more opportunities, more business opportunities. I see people moving to Ontario to start their own business,
Mm.
right? because we are a place of close to 8 to 9 million people, and there are so many. Any company that's got operations in Canada has something to do in Ontario, in the GTA. So everything converges into a place. So where there is more business, where there is more money, you will see the real estate prices going up. So Ottawa is still a viable option in the long term.
Hmm.
If you find, because Ottawa has a lot of government offices and universities, and there is a lot of things to do in Ottawa, but it's a smaller place. It can't be compared to your New York or a Toronto or a London. I'm
Hmm.
saying London, not London, Ontario, London, UK, right?
Hmm.
Those are business capitals. Toronto is a business capital. Ottawa is not. Ottawa is a government capital. So it is going to appreciate in value, but it's going to be slow. But for a new investor, if you already have a home and you want to buy a condo and rent it out in Ottawa, it's not a bad option. It's still an investment that's going to appreciate in price. You're going to build up equity. But
Hmm.
I'm saying don't just look at the price. Ottawa, from where we are, it's approximately 5.5 hours on road, right? So you need to be, if you need to look at the property, if you need to go there, you need to factor the 5.5 plus 5.5, 11 hours of commute time,
Yeah.
right? But if something fails, if an equipment fails, you don't have to go to Ottawa to fix it. We can always, I manage a lot of properties, not my own. I manage properties for my clients. And I don't go to every property when there is a problem. I have trades assigned to that area. Say if it's Waterloo, I have trades in Waterloo. I call them and say, hey, washing machine failed at this place. Go and look at it. They go and take a look at it and they invoice me. So same thing we can do for Ottawa. You don't have to go there every week, but if you have a property,
Mhm.
then you should be able to visit it. So you need to
Yeah.
factor the commute time and what it's going to impact your everyday schedule. So if you want to go and see your unit twice a year, are you able to do it? Right? And if there is some major renovation that you need to do, are you able to go there? Are you able to mobilize the workforce? Those are the factors you need to consider. But I would say, if you ask me as an investor, not even a real estate professional, I would say Ottawa is a viable option. When given the next opportunity, when I get a few coins up my pocket, I would be looking at Ottawa to put some money in a condominium close to downtown.
Okay, that's nice. So let's take the next question from Shruti. Thanks a lot for this informative session. We know how crazy housing market is right now. What will be the scenario in 2022 in your opinion? More turbulent or will it be like more stable?
Beautiful, beautiful question, Shruti. A lot of people they are asking me this question, and uh, let me give a long-winded answer again, right? When I give you some comparable, some scenarios in the past, it'll help us understand the future. So, 2020, when the prices were going up a little bit, people looked at statistics. Statistics are, you always have to take statistics with a pinch of salt, right? They said, oh, the prices are going to go down by 20% by end of 2020, right? So some of the people who go only by numbers and don't understand supply and demand, they said, oh, if I can buy $1 million home now, end of 2020, it's going to be 800,000. So let me wait for it. They were waiting. But then what happened? 2020 winter happened and 2021 happened. Prices did not go down by 20%. Prices went up by 20% and more,
Right.
because of the demand, pure demand. And there are some insane buyers. Pardon me for using the word insane. There are some insane buyers. They don't want to wait. They look at a property. Rightfully, the real estate professional would have advised them the value for the property is 800,000. That's what I do with my clients. And we bid a certain number and we move on. But these buyers, they say, as though there is no tomorrow, as though, hell has frozen over. They say, I want to put like 870 there, right?
Hmm.
Because they want to outbid everybody. That's what drove the prices in 2021. Plus, interest rates are a ridiculously low level now. I've seen people, first time home buyers, getting 1%, 1.3% interest rate on a mortgage. That's almost like getting free money. Lenders are saying, here, take the money, right? But that is a temporary cozy spot, but interest rates would go up.
Yeah.
Interest rates would go up. And what we are expecting is in 2022, not immediately, interest rate will not go up from 1% to 3% right away. It's a gradual increase. Some of the bankers, they can tell you better. So by end of 2022, the interest rates are expected to start going up, and 2023, 2024, it will catch up to where it used to be, right? 2.5%, 3% for a mortgage. Then affordability becomes a big concern, right? So somebody who thought, I can afford $1 million in mortgage today, and if they're paying, say, $3,000-4,000 towards a mortgage, when the interest rate goes from 1.5 to 3.5%, you're going to add another couple of $1,000 a month to the mortgage. So that is when people who paid obscenely high prices, they will feel the pinch. But having said this segment of 600,000 to $1 million, that is going to go still strong because most people are jumping in. Most people, who want to invest, who want to buy their first home, they are looking at condominiums, they are looking at condo townhouse and freehold townhouses. So this segment is still going to go strong. The prices would keep increasing. It may not keep increasing at the same rate. The rate of inflation, rate of increase would get adjusted, but you're not going to see any price clipping in this segment.
Okay.
Where the price correction would happen is single homes, largest single homes. I'll give you another example, right? In Mississauga, a single home, about 2,700 square foot, till 2017, 2018 was about $1.3, $1.35 million. Then when the temporary hike happened between 2017, 2018, it hit $200,000 went up. It went up to 1.55. Then it came back to 1.35, right? So the correction happened. But now if you look at the same single home, a little bit larger, builders are selling in Mississauga for $2 million. Like in 3 years, 3.5 years, the prices have hiked by 600,000 by the builders. Resale homes, the prices have gone up by 400,000. The same single home is about 1.7, 1.75. So where the correction would happen is right there. When you're paying $2 million for a home that was 1.3, 1.4 million 4 years ago, that's where the correction would happen. Historically, that's what happened in 2017. People who paid higher prices, they had to wait for 3 to 5 years to sell their property at parity. The same thing will happen. But if you're buying in the segment of a new home, an investor home between $600 to $1 million, I don't see big price correction happen. That is going to keep going up. But at the higher end, if you pay anything over $1.5, $2 million, $2.5 million, expect a correction to happen. May not be for good. You will reach parity. It'll take some time. Is what we are thinking. Most of us are thinking. That's a good thing. Even for my own home. If I lose the current value by $200,000, I would be happier because that is value for my money. Rather than $1.7 million, if it goes back to 1.5, I'm happy because it's true value for the dollar. Dollar is getting stronger than the value for my home because it's not it's an inflated value. It's just numbers. At certain point, it's just numbers. Numbers don't matter. What do I do with the numbers? If I sell the home, I have to pay the differential to somebody else to buy another home. So I don't get to keep the money, right? So that's inflation. Just like it's happening in third world countries, right? Like India, we see inflation happening, and thanks to some political moves and financial moves, there is a cap to the inflation. So this has to be capped as well, which will happen in the next upcoming couple of years.
Good. That's nice. Then we have another question from Drupad. Thank you for your response, sir. He wants to ask how to become a realtor in Canada. Any short-term course or license required for it, and how much earning scope is there?
Well, I'm not going to comment on the exact earning scope, but it takes approximately a couple of years. There is no shortcut to it. Unlike this is a highly regulated industry, and we are dealing with real estate as an instrument, just like financial planners, they deal with mutual funds, derivatives as an instrument. It's a highly regulated industry. There are 7 courses that you need to pass, and you need to do an articleship. You need to work with a brokerage. So it's not the people look at the commission and say, they get to pocket all the commission, but there are a lot of expenses too. We need to have, even after you get your license, We need to pay the brokerage. We need to get. We have mandatory fees. We have mandatory insurance requirements, and even without doing business, you would spend a sizable amount of money to keep your license active, right? So don't be fooled by when you look at a real estate listing and you look at the number, the commission percentage, and say, oh, why? They sell $1 million, they take it $25,000 home. We don't take $25,000 home. Yes, that is the commission on paper, but we have to pay the brokerage, we have corporate fees, we have taxes, and we have standard expenses too. So, short answer is it takes about a couple of years. You need to join one of the colleges. I don't know where you are, based on where you are. There are certain institutions that offer. So, you need to get licensed, and it's a business. It's not automatic, right? Once you have your license, people don't just come to you. It is you join a brokerage, and then you need to, just like any other business, it's like starting a grocery store. You open a grocery store, people are not going to keep flocking at your doorstep, right? So be ready. It's a good industry. I am from an IT background. After 32 years of program management in IT, I took to real estate. I mean, I've been investing for 12 years. I got my license 6 7 years ago. I've been full time for over 2 years now, because the love for real estate. I get motivated working with people. I get motivated, looking at real estate. I go to bed thinking of real estate. I wake up thinking of real estate. So it's not just a job for me. It's a passion,
Passion. Yeah.
and you need to have the passion. You need to have the fire, and it's a 24/7 engagement. I pick up the call whenever,
Hmm.
except my nap time. I go to bed around 12 o'clock and wake up around 6 or 7. So except my sleep time, my phone is active. I am on messages. I do, reply to people. It's a passion. You need to have a sense of, okay, I'm helping somebody realize the dream. If you
Yeah.
look at my tagline, it is, making your dreams come true, one home at a time. Truly, you need to have the passion. Otherwise, there is no point in showing a few homes, doing three, four transactions. It becomes like a job, mundane job. So it's like a business. It's a decision you need to take, Drupad. If you love real estate, if you love working with people, if you love helping people, it's a way to go. Takes time, money, and energy, but it's a very satisfying profession, because every home you sell or buy, you know you see that the buyers are so thankful. You help them in a journey, right? So that sense of accomplishment, that peace of mind, no amount of dollars can buy.
Right. Actually, Uncle, I would like to take a moment here because many of my friends and subscribers keep on asking on the YouTube channel and on our ID as well that they just want to become a real estate agent. They are just
Yeah.
motivated by the money factor of it.
Yeah.
They just feel that if I sell a $1 million house, I'm going to make 20,000 in commission,
Yeah.
and if I make like 4 houses, I am able to make around $80,000 just like that, just by doing 4 transactions.
Yeah.
What they don't realize is the commission is just the tip of iceberg. They don't see
Yes.
the bottom part of it. How big,
Yeah.
how much efforts they have put into it. So
Yeah.
Drupal, also let me just like Uncle said, if you are really passionate about it, only then get into it, because
Yeah.
otherwise there are so many people. You won't believe, I had taken Uber before pandemic. I had been somewhere, I had taken an Uber. That guy was an Indian.
Yeah.
While getting down, he gave me his card. He is a real estate agent.
Yeah.
I went to buy sweets in a nearby desi store. That guy gave me his visiting card. It's on the front. It is the name of the sweet shop. Behind, it's a real estate card. So
Yes.
he is using the same card for multiple purposes. So
Yeah.
basically, the point I want to make is, don't think that real estate is for everyone, because but that is what makes the quality of it, right?
Yeah.
So even if I'm not telling it's an easier course and everyone can do it. It's not it's the value that you add to that profession.
Absolutely, absolutely. And in any other business, right? It's not a job. In a business, let me tell you, right? In a business, 80% of the money is made by 20% of the
Right.
agents, and the remaining, 20% of money, 80% scramble, right? So it's not. I would say, when you are starting a business, real estate as a profession, although we are attached to a brokerage, it is a business. It's your own business. Unless you have a passion for it, if you're just looking at money, I would say, if you just look at money, Don't get into anything just looking at money in life. Look at the overall value that is bringing to you and you are bringing to the table. Because down the line, I don't mind saying my age. I'm 56 years old. I'm happy, and every day I wake up cheerful. I don't have any regrets because I do what I like and I do the right things. So that brings you a lot of satisfaction, peace of mind. People talk
Yeah.
about stress these days, right? Stress is because people are chasing the wrong things in life, right? I'm not saying money is unimportant. Money is important, but you need to understand at a certain point of time how to get money to work for you rather than working for money, and then do it in a peaceful manner, right? Because people, like Sid rightly said, people look at the 2.5% and said, wow, I only have to do 4 transactions in a year. But getting to those 4 transactions, it's not easy.
Yeah. Yeah.
Because just because somebody has a business card saying I'm a real estate agent, people are not going to come to you. It's your
Yeah.
integrity, it's the networking, it's the overall personality, right? When people know you, they know people, they may not have all the facts handy, but human mind is extremely perceptive. When you talk to somebody, you know whether they're saying it or whether they mean it.
Yeah.
Like Stephen Covey says in the 7 habits of effective people, we should not say things, we should mean. Do what you say and say what you do. Then the trust comes in automatically. And all the best. If you want to embark on a journey, all the best. I can definitely help you. But I will not encourage anyone without a passion to get into any business, be it
Yeah.
real estate, owning a bicycle shop, or a grocery store. I've done everything. That's why I'm telling you. I did not start any business where I did not have a passion. And I've seen a lot of success. Success is again relative, right? Success is relative. Success is a factor of your mind, not what somebody tells you. Just because you make $1 million out of something doesn't mean you're successful. You could be extremely unsuccessful, extremely unhappy making $1 million. So I would rather make much less and be happy.
And I would, Drupad, also like to tell you one more thing about Ravi Uncle. I have known him from last 3.5 years.
Very good.
But only last year I came to know that he is a real estate agent, that too from some third person.
Uh
So that third person told me that that guy Raju Ravi, he is a very good real estate agent. I told him I know him from last 3.5 years. He never
huh.
mentioned it to me. So that tells that Ravi uncle is so passionate that he wants his clients to tell good about him rather than he
Yeah.
doing his own self appraise, self
Yeah.
praise and advertising. So
Yeah.
that is what is real success according to me.
Absolutely. Like I have a website, like Sid said, and I do some marketing, but that is to keep the name out there.
Right.
But most of my business comes from people that I know, my family,
Right.
my close friends, and people that I've known for like 15, 20 years. And like Sid said, I don't go and solicit. It comes, right? People call and say, hey, I want to sell a house, I want to buy a house. And that's how it happens because that's the value we bring to the table, right? And people should be trusting. At the end of the day, showing a house, buying a house, you should have the passion for it, right?
Right.
It's not, don't get into any job, not just real estate, just looking at money, because looking at the numbers is, again, it's a number game. It's very deceptive.
That was a great answer, uncle.
Yeah.
So now we have a couple of more questions, but let's move to our set of questions as well.
Yeah.
So many people think of buying a house as a debt trap.
Hmm.
What do you think about this? Even I was of the same opinion, to be honest with you. So I was just hoping that if I can afford, I can pay like $2,000 in rent, and I'm good.
Hmm.
I don't have to,
Yeah.
get into
So
the
that's a beautiful question, Sid. It's a segue into something I wanted to tell people, because
right.
close family, you heard it from me, and close friends and family, they heard it from me over and over again. Let me break it down, break the real estate scenario down into money and opportunity, right? So first of all, you, as in somebody is renting, you are paying X amount of dollars, maybe $2,000 to your landlord, and your landlord loves you because you're paying for his mortgage, right? And you can keep doing it for 10 years. I did it. I used to live in the States for 6 years. Since I did not apply for a green card, I was renting for 6 years. And then 99, when we landed here, 98, 99 on a PR, I told my wife, we are going to rent for 1 year. and then we're going to buy a home, right? So I paid my landlord for 7 years out of the close to 30 years I lived in North America. No regrets, no regrets. But what I learned is, as soon as I buy a home, the home is paying yourself,
Right.
right? Instead of paying a landlord, instead of paying some other community, instead of paying, somebody else, you are paying yourself. Let me tell you how. Your mortgage, all of us know, as soon as you own a home, the bank owns pretty much most of the home. You own 20%, and the bank owns rest of it. They put a lien on the property. It's okay. But when you make a payment, the payment is not just the mortgage interest. The payment also has your principal. Now you get a new variable which you did not have when you're renting. When you're renting, there is no principal. Yeah, there is a principal, but that's the landlord's principal you're paying. But when you own a home, you make the first payment. Say you make $1,500. Part of the $1,500 goes towards your principal, which means automatically, without you realizing, your equity is built up. And let
Right.
me tell you, with such a low interest rate, it's an equated monthly installment, right?
Mm.
So your 1,500 is going to be stable, but with a low interest rate, more of the money goes towards your principal.
Mm.
More of the money. As the interest rate goes up to 3% from 1.5%, you'll be paying more towards the interest.
Right.
Now, with low interest rate, more of the principal gets paid. Let me tell you, if you buy a $600,000 unit today and your mortgage is $1,500, I'm just throwing a number, right? Don't kill me if that's not an actual number. If a mortgage is, say, and on an average, what I've calculated is, when the interest rate was around 3%, your principal would be $6,000 to $7,000 every year. You
Right.
would be paying off $6,000 to $7,000 of principal. But with a low interest rate, you are paying up to $10,000 a year.
Mm.
So you buy a $600,000 unit and you start moving and start paying mortgage. The end of the year, you look at it, you paid up $9,000 to $10,000. That is $9,000 to $10,000 that you did not have when you're renting.
And you are renting. Yeah.
Your landlord had that money, not you, right? So that is one way of indirect saving. And say in 3 years, 3 to 5 years, your home appreciates minimal to another 40 or $50,000, right? 10,000 times 3 is 30,000 you already earned as principal accumulation, and your property has gone up by 40,000. So that is $70,000 in 3 years, which you did not have when you're renting. Your
Correct.
landlord had the $70,000. You helped your landlord make that $70,000 in 3 years. So I would say these are two simple ways. In Toronto, especially if you're targeting the product between 600 and 900,000 or $1 million, your property value is not going to go down. Even if there is a temporary dip in 3 to 5 years, it's going to come back. You are going to see a net appreciation, right?
Mm.
$600,000 may not become $800,000 right away, because what happened in 2021 is like a tsunami. Nobody expected that kind of windfall, but there is going to be a steady growth. Even with a steady growth, in 3 to 5 years' time, your equity and appreciation is going to be $70,000 to $80,000 if you own a home today,
Right.
right? So those are two ways where you're saving money. Yes, paying the landlord and not having to trouble with the ownership, property taxes, your utilities, your appliances. That's all there. But would you rather have the $70,000 to $80,000 and worry about, my appliance fails, I spend like $200 to fix it,
Mm.
right?
Yeah. Yeah.
Even if you're spending $1,000 more to fix appliances and stuff in a year, does it make sense? In 3 years, 4 years time, you're spending 4,000, but you're gaining an equity of 70,000. Tell me, are we going right or wrong with that? Right? And the third beautiful thing that people don't understand is, I am an investor, right? First, I started investing, then I got into the real estate profession. For me, these two are insignificant. My equity, pay up of equity and appreciation, I don't care about that. As an investor, what's more important to me? Anybody can say? Availability of money, availability of funds for further investing,
Right.
right? That is the key. Because after you buy your first investment property, second investment property, banks are going to consider you as a high risk, right? Unless you put down certain amount of capital, they're not going to loan you the money. So to me, If I can borrow money from myself, that is more important than anything else. So once you have your first home, once you have a home, your equity keeps growing. And at certain point of time, you can take money, more money out of your own property.
Mhm.
That's called legal leveraging. It is legal. You can appraise your home. Suppose your home, you buy it for 600,000, and 3 years, 4 years down the line, the value goes up. You can go to the bank as long as you're mortgageable. And there are good products called home equity line of credit. You
Right.
can refinance your home and take 50,000 out of it. Your existing home, it's not extra money. Your home is giving you the money on a golden platter. Take it and invest it. So, as an investor, that's more important. So, once you own a home, it keeps paying you in multiple ways: equity, capital appreciation, and leveraging. So, I would say, which you will not have if you keep paying, you are
Mhm.
giving all of that to your landlord. You're giving them capital, you're giving them equity, you are helping them leverage themselves even more. So, I
Even
would say, as a newcomer, I would say set yourself a 2 year time frame.
right.
2 years, 2.5 years. Start working towards it. Talk to me. I can help you, set up, line up with the right people, talk to the mortgage broker, have a plan. I know a lot of people who plan. Like Sid, you and Sim, you are an excellent couple. I admire you for the planning. Life events do happen. Life events do. You have a new baby, you have a job change, people need to, I'm not meaning you, Sid, but
Yeah, yeah.
people have to send money to India, aging parents, right? So that will define your own timeline. There is no right or wrong timeline. Just because I say 2 years and somebody doesn't buy a house in 2 years, don't beat yourself up. Talk to me. I used to be a financial planner. I can understand your finances. I can help you understand what you need to do, what you need to plan for. Unless you have a plan, there is no tomorrow. As long as you have a plan and your plan takes you 3 years out, that's okay. Still, you have a plan. But if you don't have a plan, that's a disaster. So, plan for your future, plan towards your first home, plan towards your investment home. Planning, planning, and planning, and talking to the right people. Don't just talk to everybody. Don't talk to your neighbor and say, "What do I do?" As long as they are not a professional, don't get opinion from qualified professionals. If you want to talk about a mortgage, I will set you up with mortgage professionals. Talk to them and get the right information. See how much down payment you need in order to buy a home.
Mhm.
Don't just talk to your colleagues and say, "Oh, what do you think about it?" Opinions, everybody has an opinion. Opinion is not going to drive your life. Facts and figures and plan is going to drive your life. So plan. So hats off to you, Sid and Sim. You are great people in planning.
Oh, thank you, thank you. All because of your guidance, to be honest.
Yeah.
So those of you who don't know, I had spoken openly about this to Ravi Uncle about how do I need to plan my finances and all these things. So he was kind enough to tell us in a detailed way about how we need to save, how much we need to save. And like he said, there are a couple of life events. We were blessed with a baby girl recently. She
Yeah.
turned 6 months last week. So, such events keep on happening. So that has delayed and because of COVID, our house buying plan has got delayed by another 1 year, 1.5 year. But like he said, it's okay. I don't know, as long as you have a plan, you can absorb that minor glitches that life throws at you.
Absolutely.
And, when life gives you lemon, you make the best lemonade out of it.
Yeah, think about me. I talk so much about real estate and investing. It took me 7 years of living in North America before we decided to buy our first home, right?
Right.
So I know people who bought their first home in 2 3 years, but we live in the US in a couple of different cities, and we paid rent. We made the landlord rich for 6 years, and then one more year in Canada. Then we bought. So that was my timeline, and I'm
Right.
quite happy. No regrets. That was my timeline. I was comfortable doing that. So every one of you have your own timelines,
Right.
but go with a plan. That's what.
Yeah. So the next question that I have is, if it is difficult to pay 20% as a down payment, would you still suggest buying a house with 5% or 10%, considering that you have to pay for additional CMHC insurance?
Absolutely. CMHC is a good point. That is the CMHC is an insurance that insures
Yeah.
the lender, not you, right? So if you pay less than 20% down, the lender will still give you a mortgage if you're a first time home buyer. If you're an investor, it becomes a tricky situation, especially with the new rules coming in. But if you're a first time home buyer, I would say if the numbers work for you,
Mm-hmm.
it's okay to pay the additional. That will be added to your mortgage. The
Right.
CMHC portion would be added to your mortgage. It's a cap of 2% or 2 point, no, it's a, and then as you pay more, if you pay 10%,
Mm-hmm.
proportionately it comes down. That is the money that will be added to your mortgage. I would say it's still worth it. If the numbers work for you,
Mm-hmm.
if you're able to afford the mortgage payments, and if it's a product you like, go for it. First home, it's a key. It doesn't matter. It's very given the currency. Even if you go for a $600,000, $650,000 condominium,
Mm-hmm.
20% down is $130,000 plus closing cost of $12,000 approximately. Think
Right.
about how long it's going to take for you to save 130 or 140,000. Do you
Mm.
want to wait that long, or do you want to take advantage of the existing market, low interest rates, and build up your equity? I would say now is the right time, not tomorrow. So if we get you qualified through a mortgage broker and you can buy a product today,
Yeah.
today is a good day.
Right.
Not tomorrow, not the day after.
And the time that you take to save up to 130, like 20% down, the property prices would have reached another level altogether.
Absolutely,
No point.
absolutely. People talk about higher salaries these days, but again, saving up to 130,000
Mm.
takes time. It's a lot of money. 130,000 is a lot of money. I'll tell you, 6 years of working in the States. I came to the United States the early 90s.
Mhm.
And when we migrated here 98 and 99, after 6 years of working on a very good IT job, guess how much money cash I had in hand? 40,000 US dollars is what I bought after 6 years. But again, we are not talking about big salaries in the 90s. Good salary was about like $80,000, right?
Right.
80,000, entry level people get 80,000. So, but again, I'm talking to you about saving 130,000. It's not. It's difficult. Even
Mm.
if two of you are working, making 70, $80,000 each, there are taxes for good reasons because we get free medical, we get a lot of things handed to us on a golden platter. So we have taxes and we have expenses, right?
Right.
Where you live, you're paying your mortgage, you're paying for the car, you're paying for insurance. So money is consumed much faster than we
Right.
would like to.
Correct. So now let's take a couple of questions. The next question is from Sumi. Assignment, assignment sale slash purchase. How does it work? Thanks.
Beautiful question, Sumi. Assignment. Okay, let me tell you. We spoke about pre-construction.
Mhm.
Pre-construction is buying directly from the builder, booking a house, making a down payment, waiting for 2 to 3 years, and getting possession of a new unit is pre-construction. That's a separate segment. Resale is what is existing. People
Mhm.
already bought their homes. They are selling either because they're downsizing, upsizing, or they want to sell an investment property. It's out there in the market. I can look at the property in my multiple listing service and I can show it to you today. That's resale. Assignment is something in between. It's still a new home. Say, for example, Sid goes out and books a condominium with a new builder, right? And it's ready next year. And the builder allows him to assign the right to buy the property to somebody else,
Okay.
right? So what Sid could do is, okay, you know what? I booked it for 400,000 and now the value is 500,000. Let me make the extra 100,000.
Mhm.
It's perfectly legal. It's perfectly legal. It's allowed by the builder as long as the builder says, yes, you are able to assign, you are legally able to assign, and it's executed by the lawyer.
Okay.
Again, most of the assignment sales come through us, right? It's listed in MLS, and I tell you, hey, there is an assignment property. Okay, you wanted in this neighborhood, it's available for 500,000, but the seller booked it for 400,000 and he already paid a deposit of 30,000. Here is the catch. Assignment is cash intensive. When you buy an assignment from Sid, I have to pay him the $30,000 he paid the builder and the $100,000 markup.
Okay.
So
Got
you
it.
have to pay it. It is cash. Assignment is cash intensive. Some of the sellers might say, okay, I know you may not have $130,000 now. So when I assign it to you, pay me 60,000 now. And on closing, pay me the rest of the money. And here is the catch. When you go to a mortgage broker, they are not going to look at your buying price. They are going to mortgage Sid's buying price from the builder. In other words, you are
Okay.
going to get a mortgage for 400,000, not 500,000. So whether it's today or on closing date, you are responsible for the differential. You are
Oh.
responsible. You as a buyer of an assignment is responsible for the markup of $100,000. So it
Hmm.
is cash intensive, but it's a good option. A lot of people are jumping into it because you don't have to book with a builder and wait for 3 years. Your property is getting, you would get possession of the property in 6 months' time, right? Assignment, there is a, I don't think builders will let you assign 3 months before occupancy, but any time after your full deposit is paid, and there is a particular percentage of sale. I think they want 90% of the units to be sold before you can assign. So you have a good window,
Right.
right? So rather than going to the builder and waiting for 3 years, your house is ready next year, but you need to pay the markup to a person who was good enough to go and book it 2 years ago or 3 years ago. So it
Hmm.
is a cash intensive purchase, but it's a good option. Some people who saved up money, they are jumping into it because it's a ready-made neighborhood. They
Hmm.
don't have to wait for like 3 to 4 years or 2 to 3 years to buy the property. But again, what you need to be cognizant is mortgages, usually lenders, good lenders, they will only loan the value of the property as bought by the original seller,
Hmm. Okay.
not your value. Even if you're paying $200,000 markup, mortgage is not going to cover the $200,000 markup. You are responsible for the money. So it is cash intensive, but a good option provided you have the money.
Hmm. Cool. That's nice.
Mhm.
Okay. So, which cities outside GTA would you suggest to buy? Priyanka is asking.
Absolutely. No, if you look at any city, right, like I said, it depends on your affordability, the product you want, and what makes you call it home. To me, home is Mississauga.
Mhm.
I wouldn't even think of Milton as home. Milton is a good investment land for me. But Drupad or somebody asked about London. London's a good place. If you want value for money and you don't have to commute and you're okay with, seeing your friends, driving 2 hours to Mississauga or Etobicoke, London is a good option. Or if you have to commute eventually to Toronto, East End, if you look at Pickering, Ajax,
Mhm.
Whitby, and Oshawa, they are good options. They have some cheaper options. Or if you are like Sid, you don't mind going on 401. Cambridge is a beautiful city. Cambridge is a beautiful city. It's right on 401. If you have to go to Guelph, you take exit from 401, take Highway 6 and drive 15-20 minutes to get to the city, to get to the homes. If you are in Kitchener, same story, 20 minutes into the city on Highway 8 to get to Kitchener. But Cambridge, you take an exit. It's a small city, three exits:
Right.
Townline, Franklin, and Hespeler. You're right there. Once you take an exit, you start seeing the homes, you start seeing the stores. Cambridge is a nice option if you don't mind. And again, from Mississauga as a center, Cambridge is about 80 kilometers away, right? So you got to factor the distance. And Burlington is a good option. Oakville is more expensive than Mississauga, so I wouldn't recommend Oakville for most of the first-time home buyers. There are some products that are smaller.
Mhm.
You look at the price; it says $650,000 townhouse, but it's a stacked townhouse. When you
Mhm.
enter the property, it's stacked, right? You'll have somebody. You don't own the whole silo. There
Right.
might be a unit under you. You might have two levels, or there might be a unit above you. You'll have two levels. It's a stacked. It's a boxed up property. Some people are comfortable. They want the location. I would say take the same money and go to Burlington, right? Burlington is a good option. Some people are moving all the way to Hamilton because Hamilton, there is a huge revitalization that's happening in
Right.
Hamilton. In the next 3 to 5 years, we're going to see Hamilton waterfront taking shape. It's not going to be the old Hamilton downtown that's battered where people, don't want to go. The city has promised the residents and investors that They're going to revitalize Hamilton as a total. They're going to rebrand Hamilton downtown, right? Yet to see. I'm not making any guarantees, but I'm positive
Yeah.
they will revitalize. They have to revitalize because that's one place in GTA that hasn't seen a lot of growth, a lot of new developments, but it is happening. So Hamilton is a viable option depending on where you need to go to work, where your heart says I can call it home. Lot of options in the golden horseshoe. It's not just one city. We can talk, when you're serious about buying a real estate, even if you want some information, we can talk. Call me. Sid has my number. Sid has my coordinates. Call me. We can text me. I can give you a lot of information just by talking to you. I will tell you. I'll give you the answer as to what you should be looking at Burlington. You should be looking at Hamilton, right? It's your risk appetite and it's your need. Where do you need to go for socializing? Where do you need to go to work? How
Right.
far are you willing to drive? Right? There are a lot of good options. You don't have to look at the core GTA anymore. I see people moving as far as Bowmanville. 2 years ago, if I told you Bowmanville, you say, where is Bowmanville? Which direction is it? It's east. It's east of Oshawa. It's further east of Oshawa, right? And people are moving to Innisfil. Where
Investment.
is Innisfil? Close to Barrie. Where is Barrie? It's north, close to Lake Simcoe.
Yeah.
People used to go to Barrie for cottages 20 years ago, but now people live in Barrie, right? So there are a lot of options. You don't have to be in a Richmond Hill. You don't have to be in a Vaughan. You don't have to live in Markham, not Mississauga, Etobicoke. A lot of options depending on where you need to go to work, where you need to socialize, and what feels like home to you. When you come back from work, 6:30, 7 o'clock, when you spend your Saturdays and Sundays, does that location feel like home to you? Do you
Mm.
want to raise your family? Do you want to take your kids for a walk? Do you want to take your dog for a walk? Are you comfortable? Does the air feel fresh for you there? Right? So it's all a matter of perception.
Right. So I hope that answers your question, Priyanka. The next question we have again from Drupad. How real estate market and system is different in Canada from India? And can we ask our parents or relatives to send money while purchasing house for down payment?
Beautiful question. Okay. You can't, as a market, as a real estate practice, you can't compare the market in India to the market in Canada because in Canada, it's a highly regulated segment. We have a body called Real Estate Council of Ontario. It's a governing body. It governs everything I do. We have to study property law and we are subjected to very high levels of scrutiny. In India, real estate is an unregulated market. Anyone with a few contacts and access to properties can call themselves a realtor. It's not regulated. They're not regulated by the law. They don't have to abide by, maybe there are certain rules, but not as strictly. For example, I post an advertisement on my MLS for a property that is regulated by RICO. They tell me exactly what I can have on certain fields and what I cannot.
Hmm.
I cannot promote myself through a multiple listing service. It has to be promotion of the property. I make one mistake on a certain word, my broker of record would call me and say, hey, you made this mistake, change it. So we are, and I cannot, you see a lot of people saying number one in real estate sales, right? That is again not the right way of marketing. They could get into trouble. When I say number one, I have to say number one in what?
Hmm.
You see people saying, I am the number one realtor in GTA. You cannot have 20,000 number one realtors in GTA. We have 60,000 realtors in GTA and everybody cannot be number one. If I say number one, I have to qualify and quantify. I have to say number one realtor in GTA in the brokerage for 2021 as far as selling volume is concerned, right?
Right.
I have to qualify. So everything is regulated. The regulation is to protect us and our clients and the marketplace as a whole so that we don't do misrepresentations.
Hmm.
And again, when we buy or sell a property, we have to disclose anything, any material defects that we know. So if I'm listing a property, you have the right to call me and say, are there any known major deficiencies in the product? In India, they'll say, oh, it's beautiful.
Hmm.
It's the best property. But if I have mold in the property, I have to disclose it to you.
Right.
I have to. Otherwise, you can come back to me and said there was mold in the property. You would not, even after the transaction is completed.
Hmm.
If there was mold in the property and we rectified it, I have to disclose it to you. I cannot hide it. These are all regulations strictly governed to protect everybody, not just the clients and the buyers and sellers, us as well, the
Hmm.
whole marketplace. So there is a lot of integrity that comes into play, not integrity, self-enforced integrity, integrity enforced by self, the brokerage, the marketplace, and our governing boss, Rico, right? So it's widely different. You can compare this to any developed country. Most developed countries, they have a very evolved system of real estate transactions and trading. And there are multiple governing bodies that govern it, right? That's why when we give advice, I'm not supposed to give advice on mortgages. I can give you best known facts. But if you're asking me for specifics, you say, Uncle, I have like $100,000. Would I qualify for 800,000? I'd say, hold on, let me get you in touch with my mortgage broker. Talk to them. They are qualified, right? They are governed by their own governing bodies. And if you ask me a legal question, just like you alluded to as a foreign investor, I can give you information that I know, but I have to refer you to a lawyer who can give you. That becomes the ultimate say,
Hmm.
right? If you have an accounting question, I can help you with what I know, but I have to refer you to an accountant, right? So those are ways everybody is protected in a regulated marketplace. So we cannot compare. It's like comparing apples to oranges, right? Not even apples to oranges, apples to figs. When you compare an unregulated market to a regulated market. Having said that, your second question, a lot of people get money from India from parents. It's called, again, this is a qualified question for an accountant or a lawyer, but you can get gift, right?
Okay.
There could be a gift, there is a particular format for a letter. They can send you a gift which you are legally allowed to use as a down payment
Hmm.
or as you please, because next of kin, whether they live in the same country or whether they live abroad, they are allowed to gift money to a son, daughter, or a sibling, but it has to come in a legally approved format in a letter that will be taken into consideration, right?
Right.
So gift is definitely possible.
Hmm. So I hope that answers your question, Drupad. And the next wonderful question is from Indo-Canadian couple. If I put all cash down, will bank fund me for the next house considering I own a house?
Beautiful question. Beautiful question. A lot of people ask me, and even investors, seasoned investors, they don't understand. Short answer is your equity does not guarantee you a mortgage. Mortgage is purely based on your cash flow, the money you make. In short, I've asked them the same question, right? I keep buying and selling homes and I invest. And sometimes, for a person who's been in the country for close to 30 years, bank might come back and say, I cannot give you a single dollar in mortgage.
Hmm.
So they don't base it upon the equity. You can draw money out of your equity and leverage it. But banks go by, what did you make?
Right.
What is your notice of assessment for the previous year and the year before, the last 2 years?
Hmm.
That's what they're going to look at. What are you employed? Do you have a job? Are you on probation? So they are looking at your cash flow. They are looking at how much money you make, how much money you declare to CRA. That is deciding the mortgageability. This based on my own experience. Having said that, we can talk to a mortgage broker, and there might be innovative ways where they can see.
Right.
Sometimes when you go to a bank as opposed to a broker, the broker might have a little bit more leverage. Bank might say, no, I can give you 800,000. The broker, they might consider the tenancy aspect of it. They might be able to fund you $50,000 more, but it's not going to be 800 and 1.6 million. That's not going to be the difference. Difference is going to be, $30 to $50,000 more through a broker, because their ratios might be a little bit different. But again, cash flow, your employment, the money you declare to CRA, bottom line decides on your mortgageability. Good question. I've been stung with it personally myself multiple times.
So let
Unfortunately, it is what it is.
so let me rephrase this question in a different way. Say for example, I win the OLG Lotto Max lottery, for
Yeah.
example. Now I have all the money in the world to buy a property, right?
Hmm.
Can I still go and buy a property without having mortgage?
Yes, you can.
You can,
If
right?
you
Okay.
have the cash for it, yes, you can. You don't have to win a lottery. Like I said, that is the extreme situation. Say you own a home, right?
Yeah.
You say, for example, you buy a $800,000 property and you keep, at it 10, 15 years. You build up sufficient equity. You make advance payments because usually on a conventional mortgage they let you pay up to 15% of the original mortgage as a one-time payment every year. So you
Yeah.
do all that. You have a good job. Sim has a good job, and you build up equity. And down the line, 15 years down the line, you say, you know what? I don't want to be bogged down by a mortgage. Now
Right.
my property is worth 1.2 million or 1.3 million, and I have an equity of $1 million, right? So you take the million, you sell the property, take the equity, you have cash of 950 or $1 million on your hand,
Mhm.
you downsize. You go
Right.
and buy a property that's $900,000,
Mhm.
right? A townhouse or a condominium or whatever is comes to that price, you can
Right.
pay it up front with no
Right.
mortgage and own the property, right? So people are doing that as they, good question. People are doing that as they get ready to retire. They are
Right.
selling their bigger homes, cashing out
Mhm.
and downsizing, where they pay off, they buy a condo or a townhouse, and they get some spare change, right?
Mhm.
So it is possible. You can buy it up outright, but make sure you have something called title insurance in place. The lawyer can set you up with, there is a lot of title fraud going on paid up homes, especially with seniors, right?
Okay.
So that is a topic for another day when I can invite my lawyer friend. We can talk
Right.
about title insurance.
Mhm.
Title, if it's a paid up property, you need to protect yourself in two ways. Any property, buy the comprehensive property insurance
Okay.
that covers flooding, fire, whatever, earthquake or whatever could happen in the area. Buy a comprehensive, even if it's not fully paid off. The moment you buy a property and the deal is signed, right on that day, get your property comprehensive insurance. If it's a condominium, the structure would be covered by the condominium corporation. You need to take content insurance. Don't be stingy.
Mhm.
Cover it to the extent of the coverage that's needed, because when you buy appliances they cost money,
Mhm.
your household items cost money. So factor all those and get a fair insurance that covers all your personal, movable and immovable property. That is number one. And make sure when you close the transaction your lawyer gets you title insurance. Title insurance protects you if there is a dispute on title.
Mhm.
Title insurance, just like any insurance, health insurance, title insurance protects you in case there is a dispute. Because when the lawyer buys you the property, when they close the transaction, they're going to make sure there is no encumbrance on the title. There is
Mhm.
no, doesn't mean something could not arise later down the line. It's uncommon, but it could happen.
Mhm.
So if something could go wrong, it will. So you need to get your property insurance in order and make sure your lawyer. There are two or three companies that do title insurance. Stewart is a good company. My lawyer always uses Stewart. You don't have to tell them which company to use. They know, right?
Uh,
But talk to your lawyer about title insurance, and in your closing papers, just don't look at the money and say how much money I spent. Flip through it and
Mhm.
see if you have title insurance,
Okay.
right?
Perfect.
So this is very critical, especially if it's a paid off home, to have the title insurance and a comprehensive insurance in place. Title insurance protects you against any fraud of the title.
Mhm.
Title is your ownership. It says that XYZ person owns this property without any other, issues. And your property insurance protects your property in case now there should be a natural disaster, in case
Right.
there should be an act of God and you need to rebuild parts of it.
Mhm.
Your property insurance, so those, don't go stingy on those two.
Mhm.
Spend the money. It's not very expensive. It protects you, especially for a paid off property. It helps you in case we need to take some corrective measures. That would be your fallback option.
Right. Okay. So, Indo-Canadian couple says thank you. Drupad, Shruti, and Sumi also have expressed their appreciation and thanks for that.
Thank you. Thank you. It's my pleasure.
We do have a couple of more questions.
Of course.
One question I had written over here. Real estate is like a profitable investment. So no matter how big or how small you start, the moment you put your hands into something, appreciation is bound to happen. How
Yep.
fast or how slow it will happen, it depends on various factors.
Yep.
But given a longer horizon and longer time period, there is bound to be appreciation. But with growing, competition and so many blind bidding wars, it's getting difficult to even put your hands into the first home.
Yep.
So, what would you think of such? What do you have to say about this?
Absolutely. Sometimes when the going gets tough, people say the tough get going. But sometimes, you may have to stop, right? That's what I did. I entered 2021 with 10 home buyers, right?
Mhm.
10 people in my pipeline, in my immediate friends and family circle wanted to buy a home as we closed December 2020. And then the market went crazy, right?
Right.
We started looking, we go down priorities. I started looking for homes with 3 or 4 people. And when the market went like, we had 40 people bidding on a Grimsby property.
Wow.
40 people bidding, and the price was listed at 599. It sold for 850 or something, right? So that's when I said, I told all my buyers, let's put the brakes,
Mm,
right? This is not, end of winter, springtime is not a good time to buy. So I'm
mm,
going to focus on my selling clients, right? People who want to sell property, I'm going to focus on that.
right.
Let's put a break and let's regroup, right? So when you see National Geographic Channel and the lion is hunting and the cheetah is hunting,
Right.
it's not always pouncing. Sometimes you have to take a step back to pounce on the prey, right? You have to wait for the right opportune moment.
Right. Right. Right.
Same with real estate. When the going gets extremely tough and you're up against all odds, it's okay to wait.
Right.
And people like me, we tell you when to wait, when to pounce. I will be your coach. I will tell you waiting is a key, right? So a couple of buyers, they were pretty desperate. They wanted to buy. I had to literally, argue with them to
Mm,
stop. But luckily, we stopped. We did some selling transactions in spring, and
mhm,
summertime was kind enough. Yes, the prices did go up, but the crazy bidding did not happen. So back to back to back, we were able to close a bunch of transactions in summer for our buying clients. Every one of them first time home buyers.
mm,
We started with a single bedroom condo, then we did two townhomes, a condo townhomes in Whitby and a freehold townhouse in Oshawa, and then right here in Mississauga, a two bedroom, two washroom, nice large condominium, right? So transactions are happening. I'm not saying there is no bidding, but the crazy bidding has stopped. There
right.
is some bidding, there is some competition there, but
Mhm,
I am able to go to reasonable agents, listing
right.
agents, and tell them, I have a good buyer. Can we get out of the bidding? And can I put a preemptive offer?
Right.
Most people, they are including the preemptive condition now, which means if they say next Friday we are going to have the offer presentation, but
Mhm,
they'll say the seller has a right for to accept preemptive offers, which means I can go today with a good credible buyer and say, this is what you've listed.
right.
I've seen this as the median price in the market. I will offer you so much, but you need to tell me today. I'm not going to give you 2 days. I
Mm,
put in an offer at 6 p.m. You need to come back and accept it if you want by 10 p.m.
mhm,
Right? So I give them a 3-4 hour window. If they accept it, good deal. If they don't, we go to somebody else because I'm not going to give them an offer to let them shop around and get a better offer. I'm going to give them a small window. I'm going to work for my buyer. So
mhm,
there are good options. I see a lot of buying opportunities coming in, and I'm working with a few more buyers, and I'm
mhm.
positive. Like I said, right sizing of your budget, the product, and the location is the key. Once we zero in on all that, hitting the nail on the head and getting your property is my job. I'll do
Right.
it.
So, Uncle, I have a question which just I thought of right now. Say, you said you deal with buying clients also and selling clients also.
Yeah.
So, is it possible for you to be the buying agent and the selling agent at the same time? So, say for example, I am looking to buy a property through your guidance, and
Yeah.
you have some other friend XYZ who is looking at
Hmm.
selling his property through your guidance.
Yeah.
So, can you be the common connecting dot between the two?
Absolutely, I can be. That's called a mutual representation. That's again a wonderful
Right.
question. It's called mutual representation when
Mhm.
I act on behalf of the seller and the buyer, or somebody from my brokerage is part of it. So it's not just me.
Okay.
If an agent from my brokerage is involved in the buying when I'm selling something, that's
Mhm.
called multiple representation. That has to be explained to both the buyers and sellers, and both of them have to agree that mutual representation is okay. So, for example, I list a property and you're interested in buying. I have to explain to you, hey, it's a property. I will deal it without conflict of interest, but it's a multiple representation. I
Okay.
have to get approval from my seller, and my seller has to agree as well, right? Once they agree and we sign
Mhm.
the affidavit saying that it's a multiple representation, both of us are okay, I can represent both of you.
Right.
Uh, and the only thing is, only there may be very few circumstances when I have the right product that somebody in my immediate circles looking for. For example, I might have listed a two-bedroom condominium,
Mhm.
and somebody might be looking for a townhouse, right? So getting the match, exact match between the buyer and seller, it happens,
Mhm.
but it happens, once in a while. It's not
Okay.
all the time. It's not all the time. I have the timing. I
Mm.
might have a property today that has to sell within like 2 weeks, but my
Right.
buyer who's looking for it may not be ready. So at
Right.
that time, I have to let the property go to somebody else because the seller doesn't want to wait, right?
Mm.
But I give the option. I tell them, I have a buyer. 6 months down the line, they want the same product. Are you willing to wait?
Mm.
If they say yes and the terms are okay, because they would want, see, everything's about con, pros and cons, right? If they stand to gain a benefit and the
Right.
buyer gains a benefit, they decide to shake hands later. But if they say, no, 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 I'm buying a property in 2 months' time, I need the money now, then they end up selling it. So, short
Okay.
answer is yes, multiple representation is allowed
Mhm.
legally. We can do it, and we have to deal with it on a case by case basis. Sometimes it works, sometimes it doesn't work.
Perfect. Okay, so the next question is, I had heard that like when market was not so crazy pre-COVID times, say suppose you are the seller, you
Mhm.
have your listing in place, and I am a potential buyer. I am interested in your property, so I put up an offer, but a conditional offer, home inspection and mortgage approval and all those things, conditions I put in place. But with
Yeah.
the market being so crazy, would you suggest people removing the home inspection clause, removing the mortgage pre-approval clause and everything, and just put, you know, I mean, what are your
It's
thoughts
a
about?
yeah, it's again in a matter of comfort, right? You rightly hit. There are three conditions that come into play.
Mhm.
One is mortgage, right? And mortgage says, am I comfortable accepting this as a firm offer without a mortgage condition, or do I need to go and seek approval from a mortgage broker? So that's why I pre-qualify
Correct.
all my buyers. I take them to the mortgage broker and they give a pre approval saying that, hey, Sid, you're okay to go up to $850,000.
Hmm.
In which case, you have a comfort level that this mortgage broker, if you buy a property for 800,000, he is going to give you a mortgage. So, although we put the condition, you have the right to waive the condition.
Okay.
Because most of the times, what happens is when property prices are high, people don't qualify to that limit.
Hmm.
They might put an offer and the property might get conditionally sold, but they may not be able to fulfill the mortgage condition.
Right.
So the property comes back to the market, which is what happened in the recent property that we bought in Mississauga. It was a conditionally sold property. And
Okay.
one of my buyer clients, he loved the unit. It's
Hmm.
an 80 Absolute, the Merlin Monroe Towers. It's a beautiful unit. It's a 1100 square foot, two bedroom, two washroom unit with
Right.
a den. It's a nice unit. He said, Anna, I want it. I
Hmm.
said, buddy, it's conditionally sold. Let me talk to the agent. So I spoke to the agent and said, I have a good buyer. The buyer will be able to close a mortgage because we have pre approved.
Hmm.
It's conditionally sold. So give me a chance if it comes back to the market. And
Right.
3 days later, the agent calls me and says, oh, this guy is not able to get a mortgage.
Hmm.
So wait for 2 more days. I'll give you a heads up. So
Correct.
since the other agent for the other buyer did not do the due diligence,
Hmm.
they could not get a mortgage, so the property comes back.
Okay.
So I was driving on the way to Milton. She calls me and says, "Hey, buddy, the property is back on the market. What do you want to do?" I said, "Yeah, I want to put an offer."
Right.
And we discussed on the price because we know the property with my buyer client. We already had a price point in mind. So we discussed on the price, the closing, and everything. When I was driving within 5 minutes, and the deal was done. Verbally, the deal was done because we had
Right.
done our due diligence, right? So I come home, I put an offer that was accepted on the same night. So
Perfect.
this time we put in without the mortgage condition because the buyer was quite comfortable. My client, hey,
Hmm.
I'm qualified for a particular amount. I can easily get my mortgage done, right? So doing the due diligence, again, it is a condo property. So he was pretty comfortable. He told me, and I don't want this condition inspection because it's a condominium. So inspection is for homes that are detached, freehold, condominiums where something could be going wrong. You need to inspect the furnace, you need to inspect the
Right.
attic, so on and so forth. So being a condo property, he came forth and said, "Let's waive the inspection condition." So
Hmm.
all we put one condition to review the status certificate.
Okay.
Status certificate is only for condominiums. Condominium is a business, it's a corporation that governs that condo, right? So status certificate tells you how much of reserve fund they have. Do they have
Hmm.
any liens on the property? Do they
Okay.
have any lawsuits going against, right? So you usually get the status certificate is provided by the owners, and we
Mhm.
send it to our lawyer to review. Usually the lawyer can eyeball it. I can read the status certificate too and see what's wrong, but I
Mhm.
cannot give a ruling saying that it's good or bad. Being an agent, I have to refer to a lawyer. So my lawyer looked at it and said, "Hey, these are the things there, nothing unusual. You can go and buy it."
Mhm.
So within 2 days, we waived the condition, we bought the property. Short answer is knowledge, doing a lot of the work up front
Mhm.
helps you in putting good offers.
Right.
So mortgage is something that we can easily waive with the right inputs from a mortgage broker giving a pre-approval and a commitment. They
Mhm.
tell me, "Hey, for this client, go for up to 850. You can waive the condition," right? So with that confidence, you can waive the condition, which gives you a better shot when you
Yeah.
put an offer.
Right. So, but another question. Okay, this is the counter question. If a property was conditionally sold and if it comes back again on market,
Mhm.
doesn't it always be? I mean, would it be possible that there is something wrong with the property? Say, for example, I like the property, I put my offer,
Yeah.
and 7 8 days later, I feel that I there is something wrong with this house,
Yeah.
and I withdraw my offer. I remove my conditions and I remove the offer completely. So the
Uh-huh.
property is back on the market.
Yeah.
So is it transparent that why this property is back on the market is explicitly mentioned? Because it could be either way, right? Sometimes the potential buyer may have some issue with the mortgage, but
Yeah.
sometimes there could be some property related issues in the apartment itself.
Yeah. So that's a wonderful question.
Mhm.
See, usually when you ask, ethics tells me that if you
Mhm.
ask me, I have to, as a listing agent, I have to tell the cooperating broker
Right.
why the property came back to the market. That's
Hmm.
ethics.
Okay.
But that doesn't mean everyone's going to be very truthful.
Yeah.
So the onus lies on us as the buyers to
Mhm.
understand. One, most of the times the property comes back because the mortgage condition did not go through, right?
Hmm.
So we have done the due diligence. Second thing could be inspection. Like I said, condominiums, most of the times we don't inspect because a lot of things are covered by the condominium corporation. They get you a maintenance fee for a reason, right?
Right.
So if you look at the property, if it looks nice, everything's okay, then
Mhm.
you don't need inspection. Third thing could be the status certificate.
Right.
The condominium may not have enough reserve fund, right?
Hmm.
They would have done a reserve fund study. They might have spent more money than they should. What is wrong if there is less reserve fund?
The maintenance could go up higher if something comes
Maintenance
up.
could go up higher, significantly higher. What if there are too many claims? The condominium will have an insurance that covers liability. If there are slip and fall claims, not all the claims are going to be honored. Some of them may be genuine, some of them may be dismissed. So if there is a couple of slip and fall claims and the condominium corporation ends up paying, they don't pay the money, the insurance pays the money,
Right.
and their premium might go up,
Hmm.
which could impact your maintenance again.
Right.
If the premium goes up significantly, you might be paying. So those are the odds, you need to consider. Say, for
Right.
example, if a corporate condominium charges you $800 in maintenance,
Mhm.
which covers so many things. If there are some expenses that are unforeseen, the $800 could become $850 next year, right? So those are some factors, and you might say it's okay. I'm getting
Right.
all this. I'm okay with the $50 extra, right? The $60 extra. So that's what happens when the expenses go up and they don't plan for it. Your maintenance goes up,
Goes up as well. Right. Cool.
right?
Well, it's already 1 hour 40 minutes, and time literally flies.
Yeah.
So Drupad is asking, when will when will such informative session take place again? Drupad, whenever you say, drop in all your questions. So we'll plan something else, a session number 2 with Ravi Uncle also.
Yeah.
So whatever questions you have, you can just drop it to my email ID. We'll collectively, make a set of questions. And if there are a lot many questions, then we'll have a second session for sure.
Absolutely. My short answer is with Sid and Sim, there is always information flowing all the time. They are constantly working not just about real estate, but about everything that covers life in a developed country, life in Canada, life in the GTA. There is constantly information flowing. I tell you, I've been in North America close to 30 years. Some of the sessions I look at what Sid and Sim are presenting, it's an eye opener to me. I never thought of so many options. If you ask me how to get a driver's license, I may not know because my driver's license I got eons ago, right? And I just pay the $100 every 5 years or whatever to renew it. So I don't know the steps. These
Right.
people do. They know the basics. In fact, one of my close associates, couple of them, they were asking about immigration. They said, "Hey, can you put me through to someone who knows immigration?" I said, I forgot because mine is like my knowledge is 22 years old. So I introduced them to Sid and Sim. They gave information. So Drupad, information constantly is flowing from these two people. I don't know how they manage it, but if you're just talking about real estate, yes, please do send your questions to Sid and Sim, and we will put another session together. And
Yeah.
as a bonus, with your permission, Sid, I would like to invite one of my first time home buyers to the next session.
Yeah.
Instead of just listening to a real estate professional and an investor, you can listen to a first time home buyer who was like you, a lot like you guys, new to the country, new as in 2, 3 years old. They wanted to buy a home. We planned, properly, and they have a home. In fact, they are moving this weekend.
Wow.
Their
Okay.
the transaction closed 2 weeks ago, and they have a 2 week overlap. They're packing as we speak. This Saturday and Sunday, they are moving to their new home in Whitby. It's a beautiful neighborhood, beautiful townhouse,
True.
almost a freehold. So I will invite them to the next show down the
Absolutely.
line, and
Absolutely.
we can get to, rather than me telling you, giving you all the information, you get to listen to one of you guys.
Right.
And these people are already talking about investing as well, seeing the market in Canada, right? They are already talking about, when can I invest? I said, enjoy your new home, right? You just got into it. Enjoy your new home. Understand home ownership. We'll
Right.
talk about it after winter, right? Next spring, we'll talk about it. We'll, get back to the drawing board and see what you want to do.
Yeah.
So absolutely, very, very enjoyable people to talk to, just like they are mirror image of Sid and Sim. We will invite them to the next session. You ask them
Absolutely. Yeah.
questions, they will be able to answer some questions, of the tips, tricks, and traps on home buying, what kind of disappointments and how we got through the disappointments, right, into, an accomplishment. So, like I say, people, we as human beings, we are taught about life as ones and zeros, but life is a big gray. There are no ones and zeros, there are no rights and wrongs, as long as it works for you and you're not hurting anyone, right? When classically, when I was in my seventh grade, my teacher asked me the classic question. He had like a glass of water. He said, is it half full or half empty? And being my father's son, I said, why do you want to judge a glass of water? I see it as a glass of water. I don't see it as half empty, half full. If I'm thirsty, I'm going to drink the water. If not, I'm going to offer the water to someone who's thirsty. So that is life in gray, right? So why do you want to judge a glass of water? Life is not ones of zeros. It's not an on off switch. Am I good or bad? Neither. I'm a human being, right? Every day I try to be a better human being. So they can explain, Akshay and Neha, they can explain how their process, you know, travel the past 2 years, how they are able to achieve the dream of owning a home, rather than me talking about as a professional. One of your own can explain. So, beautiful session. We can put together. Sid, with your permission, I just
Sure,
volunteered the information, but it's your show. You need to plan for it. But we can do a little bit more. Providing a bit more information.
absolutely. Would be more than happy to host them on this
Yeah.
channel. So yeah, we'll definitely take them. We had one more question coming up from Canadian couple. The price jump in property, is it a bubble? Your take on it, Raju Raviji.
Absolutely, I would love that to be a bubble. I think I answered it. I kind of alluded to it earlier in a couple of answers. There is a segment, Indo-Canadian couple. If I can know your name, it will be better. But I'll just address you as Indo-Canadian couple. So there is a segment which is highly contested by a lot of the home buyers, which is the price point between 600,000 and $1 million. This is the larger condominiums, condo townhomes, and freehold townhomes. Everybody jumps into it. First time home buyers, investors, foreign investors, everybody. So that segment, I don't think that's going to burst like a bubble. Where the bubble is going to burst, or where correction is going to happen, is in higher valued homes. For example, single homes, larger semis,
Hmm.
mansions where people paid more than 1.5 million, more than $2 million, more than $2.5 million. One of my friend's contacts, she is not my client, she bought a single home, 2,800 square foot in Markham for $2.6 million. Wow. I fell off my chair. I said, buddy, somebody should have counseled them better. $2.6 million for a single home, not a mansion, right?
Hmm.
So those kind of, high priced homes, there is going to be some correction happening. And Mississauga, single home that we live in, ours is about 2650 square foot, 2850 square, 200 square foot more. Builders are selling it for $2 million, right? There, correction will happen when the interest rate goes up, when home ownership becomes more expensive than it is today, right? If you're paying already $8,000 to your mortgage and you have to pay $10,000,
Hmm.
that is a big hit,
Yeah.
right? But not in the segment of new home ownership, first time home buyers. If you're buying something for 600, 700, 800, I don't see a huge correction happening. Even if there is a temporary dip, it's going to come back up very fast. If you pay 850, it might become 820, and you'll hit your 850, 860, 870 pretty fast, because you are not overpaying for your property, you're just paying the current prices. Yes, prices have gone up, but again, because of the demand, because of immigration coming in, because of foreign investment coming in, it is going to stay higher for a while. But if you paid an obscene price of $2 million for a single home, don't hold your breath. You are going to take a dip. It will come back. I can't say after how many years, but it will come back. 3 to 5 years, it'll come back. But there's going to be a dip around the 2023 timeframe.
Right. So I hope that answers your question, Indo-Canadian couple. So uncle, it's almost close to 2 hours now. In another 10 minutes, it will be 2 hours.
Yeah.
So thank you from all of us for taking out the time on a Saturday morning and coming here and guiding us with your wisdom and helping us out in solving our queries. So for all of my friends, I am giving Ravi Uncle's details again. So you can follow him on Facebook.
Yeah.
Raju Ravi Homes is the Facebook page name. You can also follow him on Instagram. Raju Ravi Homes is the Insta ID. And Ravi Uncle also has his own website, www.rajuravihomes.ca. And if there are any other questions that you want to ask us, you can email it to us at sidsimcanada@gmail.com. And finally, as a YouTuber, this is our channel
Yeah.
name, Sim and Sid.
Yeah.
Please feel free to subscribe. And Sim's YouTube channel name is Joy of Parenting. We would request you all to please subscribe to that channel as
Yeah.
well.
Wonderful. I am a fan of you guys. I
Thank
watch all your videos. Some of the videos I send it to my contacts. I send the links and say, when somebody is asking a question, I said, I don't have to reinvent the wheel. My nephew and niece, they put a nice video together. Watch it. And if you want, email them, talk to them. I freely give out your number to people. I don't know if I should be doing it. So You are a wealth of information. I'm a big fan of you guys and enjoy thoroughly talking to you all, explaining certain things. This is my passion. I love real estate. I love working with people. I want every Canadian to own their home. I want every Canadian, new or existing Canadian, to own their home and pay themselves, because wealth has to be carefully planned and built. I'm not talking about money, wealth. Wealth has to be carefully planned and built. And all of you, I would love to help you guys plan how you build your wealth. Contact me. Sid knows where I am. I can't hide. I can try to run. I can't hide from him. He is my very, very favorite nephew. So he'll find me for you guys. And I'm pretty decently good in replying to emails and text messages. I'm pretty much on WhatsApp, Instagram, Facebook. And if you want to call, we can definitely schedule a time and talk.
Absolutely.
I love to talk, as you would have seen.
Yes. So with this, I say goodbye, and everyone stay safe, stay healthy wherever you are, and see you soon in the next video.
Thank you, folks. Enjoy a great weekend.
Thank you.
Thanks, Sid.
Bye. Bye.